welcome to Balance of Power. This is Bloomberg.
Here we go. Let's have a look at some of the events that investors and beyond will be looking at this week. We've got this AUKUS meeting, Australia, the UK and the US. Of course, this nuclear submarine being commissioned. British design, American parts used for that. Of course, the big one in terms of the Federal Reserve and actually looking at the economic agenda is going to be what is the CPI print for February, looking at that to be 6%, the figure out of the US. India also out with its inflation numbers. And we've got this data dump out of China, which includes the likes of industrial production, retail sales, property investment, and a fixed asset extra year-to-date investments here as well. So that's a look at that data dump. Then the ECB decides on its cost of borrowing on Thursday, and they got rate decisions out of Indonesia. It's curious that we've got that ECB decision when Eurozone CPI comes out the day afterwards. Jacinta.
That's right, a big week for markets. ECB is set to be even more aggressive than the Fed. Let's wait and see what Madame Lagarde has to say. Now, UK Prime Minister Rishi Sunak says he will have something to say very shortly on a plan to contain the fallout from SVB's collapse on the nation's tech industry. The crisis also upends plans for the government's next budget due Wednesday. For more, let's bring in our finance reporter, Nabila Ahmed. Nabila, what are we expecting from Prime Minister Sunak?
Haslinda, Prime Minister Sunak said about 2 hours ago that he will have something to say shortly, so the markets are waiting nervously to see what he will say. We know that what he has said is that he's been working tirelessly over the weekend with the Treasurer and also the banks to figure out a way forward. He said that we will continue to support our world-beating technology sector and all the high-skilled jobs that it supports. You should be reassured that our financial system is sound and there's nothing to worry about there.
Now, what about possible suitors emerging for this SVB UK division? I think that reading some of that HSBC was one of the front runners. Who else is around?
That's right, Rishi. What's really interesting, Rish, is that in the US, we still haven't found a buyer, and the Fed had hoped to announce something by Sunday evening in the US. Obviously, we're sort of still waiting to hear what happens. There will be no shotgun marriage. It will probably take a while. So in that context, what happens to the UK assets? There's more of a question mark. Obviously, the regulators and the bank itself have tried to get a lot of people to consider a purchase. Lloyds, HSBC, JP Morgan have all been asked to look at this asset, as well as Barclays. We know that Royal Group, backed by one of the Abu Dhabi top royals, was considering a bid as well, but I think it's just not going to happen very quickly, you know.
What's not going to happen very quickly as well is that UK budget, it's appended.
That's right. I mean, obviously with the US guaranteeing deposit, that does make things a little bit nicer for depositors, and you would expect that the UK perhaps might follow suit. They have said that they're working hard on a solution that will protect depositors, so we'll see how that comes up. There is a plan B, though, if the sale doesn't happen. Banks have got together and talked to the government about, you know, taking on some of the deposits, and they want a guarantee for that as well.
Nabila, thank you so much for that. Bloomberg Finance reporter Nabila Ahmed. Now let's do a quick check of the latest business flash headlines. It's so far business as usual for Silicon Valley Bank's joint venture in China. The unit said its operations have been stable despite the collapse of its parent company. SVB's China partner, Shanghai Pudong, also urged clients to stay calm, pointing out that the California bank's operations and liquidity remain healthy. SVB's China venture had a registered capital of $289 million as of June last year. Bloomberg sources say HPS and Oaktree are among investment firms pitching deals for trapped SVB deposits. It said some are offering to buy claims and deposits at discounted prices of between 60 to 75 cents on the dollar. It's understood talks are in the early stages and prices could change. Oaktree and HPS declined to comment. And global asset manager and tech lender Liquidity Group is planning to offer about $3 billion in emergency loans to startup clients hit by the collapse of Silicon Valley Bank. CEO Ron Daniel says that Liquidity has about $1.2 billion in cash to make available in the coming weeks.
Quick look at markets, of course, all down to what's been happening with the Silicon Valley Bank and its future. We've got investors digesting the regulatory steps being taken to shore up the U.S. financial sector. We're going to have a look at the Fed's Bank Term Funding Program. It's called BTFP. It does provide advances of up to 1 year to any federally insured bank in exchange of collateral like treasuries and mortgage-backed securities. Now, a key aspect of the facility is that the Fed would value collateral at par. Now, that would allow banks to fund potential deposit outflows without, and that's crucial, crystallizing losses on securities. But the question, of course, is it enough? Is it enough of a backstop for really to stop further bank rout? Let's just check in the bond markets, because certainly it's been a vicious time for U.S. treasuries. We've got at the moment that 2-year yield dropping about 18 basis points. It's seeing at the moment something like 72 basis points being actually wiped out in recent days with regards to that. The bond markets, generally speaking, are feeling it. And, of course, let's not forget that also feeling it perhaps is what we had from Goldman Sachs earlier, which say that in March we will not be getting an interest rate hike out of the Federal Reserve. They are suggesting no change. Linda.
Well, that's right. Taking a look where markets are right now, the MSCI Asia-Pac Index in positive territory, up 0.5%, reversing earlier losses on the back of U.S. regulators stepping in, implementing those emergency measures. But it is in the bond market that we're seeing the biggest action. Yields trending lower, as we've been seeing in the U.S. That is it from Bloomberg Markets Asia. Daybreak Middle East is next. Keep it here with us. This is Bloomberg.
We've invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and their work. I know I deal with that all the time. This is really a people-first company. Even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that this is something that many business leaders are focused on, and time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at a 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been, and we'll continue to do so. We'll take a little bit of a margin compression on that, as we've had to, and I think that's the right thing, so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
We're going to have a short and shallow recession, plain vanilla, garden variety. It's totally delusional. I mean, it's totally delusional, because we're not going to have only inflation. We're not going to have only stagflation. We'll have a stagflationary debt crisis. the worst of the 70s and the worst of the post-GFC period. That's what's going to happen.
I got to say, you're not helping with my anxiety levels right now.
I'm going to go. I'm moving my portfolio to cash. 1 second. I got to pause the
Well,
podcast.
cash is not enough because it's wiped out by inflation. You have to go to assets, and I can discuss they can hedge against inflation.
Stagflation already seems like the nightmare scenario for central banks if you have high prices and lower growth. But if you tack onto that a debt crisis plus stagflation, that just seems like incredibly difficult for any central bank to navigate.
The top names in business are on Bloomberg.
Do you foresee a future where JP Morgan could potentially re-enter the Russian market?
One day, maybe, but it's very possible that won't happen in our lifetime.
Nobody covers business like Bloomberg.
This is Bloomberg Daybreak Middle East. Our top stories this morning. U.S. equity futures surge and the 2-year Treasury yield plunges as Janet Yellen says her office will protect all depositors at SVB. Goldman Sachs now says they're no longer expecting the Fed to hike next week. Earlier, shares slid in the tech hotbed of Israel. Prime Minister Netanyahu says the government is assessing the effect of SVB's collapse on local companies and what action to take. Meanwhile, an investment firm controlled by a top Abu Dhabi royal is considering a possible takeover of SVB's UK arm. Saudi Aramco posts an enormous full-year net income of $161 billion and unexpectedly increases its dividend after earnings were supercharged by last year's surge in oil and gas prices. Plus, Iran and Saudi Arabia agreed to restore diplomatic ties under a deal facilitated by China, easing a geopolitical rivalry and highlighting Beijing's growing influence in the Gulf region. Just gone 8 a.m. across the Emirates. I'm Yusuf Kamaluddin in Dubai. It was a more stressful weekend than usual because we were waiting to see what kind of updates we're going to get around SVB. And now we have a little bit of guidance, and the market is getting its head around what the U.S. government is planning to do. I want to give you a bit of an overview of where we stand on this Monday morning on the S&P 500 Mini. We're called substantially higher, up 1.7%. U.S. 10s at 369.46. I'm going to get to the Treasury yield story in a moment in more detail, but your dollar trade slides 0.9%. Brent crude does not get lit up as much. We're up just 0.25%. But let's get to the 2-year yield. This is where the story really is to understand the magnitude of the repricing that's underway. GTV Go for our clients because you've had the 2-year yields tumbling over 20 basis points on the slower Fed rate hike bets. That's a total of 70 basis points roughly in the space of less than 3 days. Now, if that sustains, it would be the largest such move since the week of Black Monday, all the way in 1987. And in the double whammy of the Goldman Sachs note, they're no longer expecting a March Fed hike and the unwinding of the inversion trades. And this is the result you have. The other repricing that's underway is in cryptocurrencies. This is Bitcoin as it stands. We are up just under 4%, 3.95%, $22,340 as the U.S. steps up its support to the banking sector. That is the biggest move in almost a month. And it is especially important given that Signature is a major bank within the crypto industry. I want to widen out the coverage and get to the markets in Asia. David Ingles has all the important angles from our Hong Kong studio. David, take it away.
Yeah, hi, Yusuf. It's a bit of a wacky Monday. It feels like a Thursday, really, in terms of just exhaustion. It feels like everyone was working over the weekend. Here's Asia so far. We're midday, so we're going into the lunch break here in Hong Kong, and up on the Chinese mainland has been in the break for about 30 minutes now. As you can see, it's a fairly volatile session. Headline risk was very, very pronounced. There's also the China angle to the story and them coming out on the weekend and keeping consistent, at least with some of the top officials there, like Yi Gang, for example. So overall, we're up 0.5%. We're split between sector groups, winners and losers, 7 to 11 in sectors, almost right in the middle as far as movers are concerned here. But really to that sort of bifurcation as far as China and the rest. Topics index, banks index, we're down about 4% on that, on the back also of the BOJ story, not doing anything on Friday. Nikkei 225, 1.4%. But really, Yusuf, to your point earlier on, I'll end on this. This is really where we're getting the consistency here. Dollar weaker, yields are pushing lower, particularly on the short end when you look at New Zealand. You look at Australia, for example. So this repricing of how high the Fed can go, and that Goldman story actually dropped about 2 hours ago. Very, very telling, ahead of even CPI. So they're saying that's a non-event. Yields are down double digits on the short end. India's the latest to come online. We're also seeing bonds in that market bid as well. Yusuf.
David, a great touching base. Thank you for the roundup. That's David Inglis there. I want to get more on the SVB situation with Annabelle Jewelers in Hong Kong as well. So it's a real sense of relief in the markets this morning after the U.S. basically said it's going to backstop deposits.
Yeah, that's the real focus here, Youssef, because going into the weekend's action, actually the FDIC was looking to arrange a sale of the bank and they were asking for bids from potential buyers. Then it became apparent that the timetable for that just too tight, because how was any sort of acquirer going to be able to look through the books, make a decision in time for Monday morning trading? So then it became more about the Fed backstop instead and turning to this Depression-era facility that's in the Fed Reserve Act to essentially make all deposits available, both uninsured and insured ones. And so that means that central banks can make loans directly. So yes, the FDIC is perhaps going to still consider options for selling all or parts of SVB. That's what we understand from sources. But the focus, as you say, very much on the Fed backstop and the relief that it's giving to the market, at least in some corners. In mentioning those moves in Treasury yields, Goldman Sachs, for instance, already saying that they think a Fed rate hike in March is now off the table. Also getting some commentary coming through from commentators, the likes of Jeffrey Gundlach, for instance, Double Light Capital. He's weighed in on his concern here that the Fed is going to be making loans on some or all of the collateral at a par valuation that is worth 40% less. He says, yikes to that. But Bill Ackman is someone who's looking at the positives here instead. He says this is really about providing a roadmap from the Fed for how it manages to plan other bank failures in future. And he says without that, we could have, that confidence, we could have been left with 3 or possibly 4 too big to fail banks where the taxpayer explicitly on the hook. And with this backstop, that is not the case.
Yeah, Bill Ackman has been providing a running commentary since all of this began sort of Thursday. But in terms of the impact on the crypto markets, I spoke about this at the top of the show. What else would you add in terms of significance?
Yeah, it's interesting, Youssef, because you spoke about that move high that we're seeing in crypto assets today. And we are, for instance, seeing Bitcoin climbing the most in around 1 month here. And that really does come down to that backstop and the reaction that we're seeing off that. But what is interesting as well, you mentioned that we had the closure of Signature Bank, and this is a key player in the crypto sector. It had already taken some steps to limit its exposure to this industry, but still lending to that industry accounted for about 23% of its balance books. And so essentially, now that it's been shuttered, the question becomes how can the crypto world access the traditional financing world? And essentially, it's been cut off in the US. So then the question becomes, okay, maybe you need to do a little bit more jurisdiction shopping, for instance, and turn to areas that are more friendly to this sector. And then you can be looking at, for instance, lenders that are active in the Middle East and also in Asia.
Annabelle, excellent analysis. Thank you for that. That's Annabelle Jewelers in Hong Kong. Well, shares fell in the tech bed of Israel yesterday as the market there got its first chance to react to the SVB collapse. Prime Minister Netanyahu says the government is assessing the effect on local companies and what action to take.
We cannot ignore the collapse of the Silicon Valley Bank. I will consider, with the finance and economy ministers and the government of the Bank of Israel, whether or not actions are necessary to assist Israeli companies in distress.
Simone Foxman joins us for additional perspective here. Simone, I mean, over the weekend, you've been, of course, talking to some of your sources. What's stuck out to you here?
Well, in Israel specifically, I mean, you look around the world, you try and assess what places potentially could have the most exposure to distress in Silicon Valley, and Israel is very much one of them just because of the sheer importance of its tech sector. Some 15% of GDP. You see most Israeli tech companies either listed abroad or funded by outside companies. So it's really unclear right now how many companies had deposits at SVB, and that's something the local media is saying that there could be about hundreds of them. But that's why you hear from the likes of Prime Minister Netanyahu coming out and saying we could consider support, especially around cash flow issues for companies that are affected by this crisis. That may be somewhat mitigated by the announcements that we've seen from U.S. authorities yesterday about allowing companies to access the full amount of their deposits. So we'll see how that plays out in markets, because we didn't get those headlines until overnight here. And of course, Israeli shares were trading. We did see some specific losses in things like real estate companies, insurance companies. And you figure, you know, if companies don't have access to their cash, then they're not going to be able to pay their employees. They're also not likely to be able to pay their rent, perhaps, Yusuf.
I mean, here's the thing. When there's distress in certain parts of the global asset spectrum, often UAE royals or Gulf royals come and they take a closer look. What do we know about this UAE firm?
Yeah, not just UAE royals, but the Royal Group, in fact, an investment firm led by Sheikh Tahnoon bin Zayed Al Nahyan. He's the UAE National Security Advisor. And from what we understand from our reporting is that that group, Royal Group, is potentially looking at buying the UK arm of Silicon Valley Bank. There's just a lot of assets out there that potentially various financial firms could get a hold of. We also understand that Oak North, which is backed by SoftBank, is looking potentially at this same asset. But I wouldn't be surprised if we hear more headlines about Middle East lenders, Middle East investment groups, potentially looking at some of the assets available on the table from Silicon Valley Bank or the others, simply because there's been this desire to forge closer relationships, particularly with the U.S. tech sector, and also who has the cash right now, who is swimming in the money based on energy prices and the like. You're looking at the companies across this region, companies and investment firms, and of course sovereign wealth funds as well.
Yeah, we'll continue to monitor it together. Simone, thank you for that. That's Simone Foxman at the Qatar Financial Center in Doha. I want to get out to Frank Benzimra. He's the head of Asia Equity Strategy at Societe Generale. Frank, what do you make then of the outcome from the weekend by regulators?
Well, what's interesting to see is that we have some kind of quite significant change in the Fed fund rate repricing, and now we are even seeing some cut being expected in November. And what is also interesting to see is that we have this steepening of the yield curve happening. So also maybe we should not read too much about that, but that's something that is interesting to note. And then looking at it from an asset allocation point of view, what it means, well, that's a typical case, kind of a second order of inflation. So you have the first order, you have increase in interest rate, and then the second order is you see some threat on the financial stability, and it's generally happening at a more mature stage of the Fed tightening cycle. So the view that we take is that we continue in our asset allocation to prefer the U.S. Treasury to U.S. equity.
Okay.
And this episode is actually reinforcing our message.
Let's break that down a little bit, Frank. I also want to get to a quote from Ben Emmons from New Age Wealth. He's a senior portfolio manager there. Here's what he writes. A calamity has been avoided by the Fed's action. SIVB is not a start of a financial crisis, but a sign that monetary policy tightening is getting through to the fabric of the economy. Well, that does not guarantee inflation will decline. How does this change the game for the Fed thinking?
Well, I think in the debate that you can have between 25 basis points or 50 basis points in March, I think it's reduced definitely the probability of a 50 basis points hike. Then the question will be whether it could end the tightening cycle earlier than expected. So that's really what the market is going to focus on. But we've seen very recently, last week, the Fed chairman giving some quite clear signals that the Fed is still in a tightening mode. And that's that's going to be interesting to see what's going to happen.
I want to lean on your day-to-day expertise, which is Asia equity strategy. What kind of tweaks are being made to that strategy, given the events over the weekend? They were significant, and it's going to move the dial.
Yes, so the important element that we need to consider is what kind of impact it will have on the banking sector in general, and also what does that mean for the US dollar and for interest rate. So our Asia equity strategy outlook is, I would say, pretty cautious in terms of the upside that we are seeing, and this is because of the tightening cycles that we are seeing in the US. I think what the kind of tweak that we can see in our asset allocation is whether the positive view that we take on Japan is going to be compromised, and we don't think so at the moment. I think the reappreciation of the yen that we have is still comfortable for earnings, but that's definitely one element that we need to check.
The Bloomberg Dollar Index is down about 0.8% intraday. You spoke about the greenback briefly. Is this an inflection point, Frank? Do I get out of my greenback exposure and get into other G10 plays here? Is this the moment to do that?
Well, the view on the dollar and reducing the dollar portfolio is something that actually has started in our asset allocation back in November, and this is something that we do very gradually and that we are comfortable to continue doing it. And that's the episode that we are seeing, and the scenario where we see some material slowdown of growth in the US coming in the first half of next year is something that will have some impact on the dollar.
Frank, great to see you. Appreciate getting some initial ideas on the fallout of SBV over the weekend. That's Frank Ben-Zimmer. He's the head of Asia Equity Strategy at Societe Generale. Let's get the first word headlines for you from around the world. Madison Mills has those right here in Dubai.
An influenza outbreak in China has intensified, with infections rising for 6th week. The northwestern city of Xi'an is preparing to enforce pandemic-style lockdowns, rolling out school and business closures to curb the surge in infections. And the Chinese Center for Disease Control and Prevention says positivity rates for flu jumped to about 42% last week, up from only 25% the week before. And India's government has opposed giving legal recognition to same-sex marriages in a landmark hearing. In its court filing, Modi's administration has said that marriage is accepted only between a man and a woman, and that any deviation can only be voted on by lawmakers, not ruled by the courts. The outcome closely being watched in countries like Thailand, Japan, and South Korea, where similar debates are gaining momentum. And the Biden administration said to be preparing more restrictions on the export of chip-making gear to China. Sources say the U.S. government has briefed local companies, and the new rules could be announced as early as next month. The plan may double the number of machines that need special licenses before shipment. And this could create fresh obstacles for chip and equipment makers. It's part of this ongoing effort by Washington to hamper Beijing's development of an advanced semiconductor industry. And Adani Group taking more steps to bring back investor confidence. It's completed the full prepayment of share-backed funding worth over $2 billion weeks before its deadline. It also prepaid a $500 million loan facility, which financed the acquisition of Ambuja Cements. Adani has been prepaying borrowings ever since a short seller accused it of fraud and triggered a $100 billion wipeout in its shares. Global news powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Madison Mills. This is Bloomberg.
Thank you, Madison. Let's get you a bit of a preview of what else is still to come on the program. Move on the impact That's the message really from Al Dhabi Capital's Nabil Silman. We're going to flesh out some of his calls. But up first, the world's biggest energy company is unexpectedly increasing its dividend after...
Nikmati kebaikan alami dari kunyit dan asam jawa yang kaya akan khasiat. Membantu menyegarkan tubuh. Golden Sparkling for your golden moment.
We were thinking big from the beginning. I mean, the reason that I was interested in doing this in the first place was a much bigger challenge than making a comfortable shoe or doing something in the fashion industry as a narrow opportunity. We thought that there was a big leadership opportunity. We looked around at an industry where there was 20 billion pairs of sneakers made every single year, and it was 100% made from plastic and the hides from cows, and it was terrible for the environment. And we thought that we could offer something to consumers that was differentiated in the way it feels, more comfortable, higher performance, and do that because we use sustainable materials. And in doing so, we could take a really interesting leadership opportunity and grab that and use that to tell a totally different story and compete on a totally different vector than what the rest in the industry were doing.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
The world's biggest energy company, Saudi Aramco, has posted a full-year profit of $161 billion. That is the most since being listed. It also surprised with a dividend hike and says it will boost spending after an avalanche of cash generated by last year's surge in energy prices. I want to get out to Bloomberg Christine Burke in Riyadh. Christine, I look at these results. I look at analysts, the 18 of them, mostly neutral. This latest dividend is going to give them something to cheer about.
Absolutely, that's right, Yusuf. So just looking at Aramco's results, they look pretty solid for the full-year annual profit. As you said, the full-year annual profit rising to $162 billion. That represents an increase of 46% from 2021 levels. And of course, this comes on the back of surging oil and gas prices amid the war in Ukraine. Now, that is not really a surprise. What is a surprise here is that increase in the dividend that you mentioned. So Saudi Aramco raised its fourth quarter dividend by 4% to $19.5 billion. That represents a shift for Aramco, which, at least until now, had been prioritizing putting its cash into boosting oil production capacity rather than returning cash to shareholders. Our analysts at Bloomberg Intelligence said that the increase underscores just how strong Aramco's surging cash generation is. They also said that they expect that cash generation to remain solid, potentially leaving room for dividends to go higher. I also want to note that we heard from Aramco's CFO yesterday, and what he had to say is that Aramco is aiming to sustain its current level of dividends and potentially even grow them from here. So what does that tell investors? Perhaps we're seeing a new baseline here when it comes to dividend payments.
Maybe we will, maybe we won't. But what about some of the capital expenditure plans, Christine? Where does that fit in compared to prior earnings, specifically Q3?
Well, when we look ahead, Aramco said that it plans to increase capex to as much as $55 billion this year. That's up from around $38 billion in 2022. Much of this will probably go toward increasing the company's oil production capacity. Remember, the company is aiming to increase its oil production capacity to 13 million barrels a day by 2027. It's also aiming to increase its gas output by 50% over the next decade. And it's also striving to expand in cleaner fuels like hydrogen. So that is where we will see the company putting money when it comes to CapEx plans for 2023.
All right, fantastic. Excellent reporting there, Christine. That's Christine Burke and Riyadh. Thanks again for that. We still have much more to come on all fronts of our global market coverage. This is Bloomberg.
Tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. China open.
This.
Privilege yang dimiliki tiap orang memang berbeda. Tapi sekarang, urusan kerja bisa dari mana aja. Caranya pakai Privy. Dari tanda tangan sampai berdiskusi, bisa langsung dari satu aplikasi. Minta tanda tangan, kirim dokumen, sampai bubuhin meterai sekarang jadi mudah dan nggak perlu yang basah. Udah pasti legal dan terjamin keamanannya.
Tumultuous events over the weekend, and specifically here in Egypt and in Israel is where you saw the biggest repricing on the Sunday. Dubai and Abu Dhabi were still offline, but in Egypt the downside was 3.1%, driven by the country's largest bank, Commercial International Bank. There's also some news around potential listings. We'll get to that later on in the program. I want to flip the board and zoom in on the Israel story, which was seen as particularly vulnerable in light of both the tech side of the story and the lending side of the story. Israel Discount Bank was down as much as 4.1%. We will see to what extent as those names recover when trade resumes later on in the day. From there, I take you to a preview on ADNOC Gas because it drew $124 billion of orders for $2.5 billion worth of an IPO, and it's going to start trading today. The final offer price was at 237 dirhams a share. We will see what happens at 10 a.m. Dubai time. Let's flip the board again and get your equity futures. This is where we stand as we get our head around the extent of the U.S. government's steps to shore up confidence in the U.S. banking system. This was much more than just about SVB. We all understood that, but the steps that they've taken are wide-ranging and have far-reaching implications, and that is leading to a firm risk-on rally. The S&P 500 mini were called higher by 1.6%. The real big moves are in U.S. two-year yields, which tumbled over 20 basis points on potentially slower Fed rate hike bets. Much more ahead. This is Bloomberg.
Please, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
I've
been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
The top names in business are on Bloomberg.
AI is real. We're already using it to do risk, fraud, marketing, prospecting, and it's the tip of the iceberg. This is extraordinary. And the other thing to keep in mind, there's good use, but bad guys are going to use it too. So it's a little bit of an arms race in how you have to use it to protect your company, protect your clients, protect data, et cetera. And we're fully engaged.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Daybreak, but let's start our top stories this morning. U.S. equity futures surge and the 2-year Treasury yield plunges as Janet Yellen says her office will protect all depositors at SVB. Goldman Sachs now no longer expects the Fed to hike next week. Earlier, shares slid in the tech hotbed of Israel. Prime Minister Netanyahu says the government is assessing the effect of SVB's collapse on local companies and what action to take. Meanwhile, an investment firm controlled by a top Abu Dhabi royal is considering a possible takeover of SVB's UK arm. Saudi Aramco posts an enormous full-year net income of $161 billion and unexpectedly increases its dividend after earnings were supercharged by last year's surge in oil and gas prices. Plus, Iran and Saudi Arabia agreed to restore diplomatic ties under a deal facilitated by China, easing a geopolitical rivalry and highlighting Beijing's growing influence in the Gulf region. I want to get back to what is happening in these markets. So we have an SVB backstop, and the market's still trying to understand the implications. But what is clear is that for the moment, at least, this is seen as a net positive for risk assets. On the S&P 500 mini, were called higher by as much as 1.6%. Also major moves in bonds across the curve. We've got US 10-year at 369.30. Your Bloomberg dollar index slips significantly by as much as 0.9%. Brent crude doesn't get lit up as much. Demand concerns are still weighing there. But let's get to the 2-year story because the yields tumbled over 20 bips, right? That was a major move that we haven't seen since the global financial crisis. But the issue at hand here is that if you're looking at 70 basis points in the space of less than 3 days, that's a whole other category. In fact, if that sustains, it would be the largest such move since the week of Black Monday all the way back in 1987. The double whammy is at play here. Goldman Sachs with their new note out saying that they no longer expect the March Fed hike, and the unwinding of the inversion trade is the other factor driving that. I take you to the cryptocurrencies as well. We spoke about this throughout the program. Quite a bit of momentum to the upside. Wow, 4.4%. We crossed $22,000. A sigh of relief, and you can almost sense it and hear it because this is the biggest move in almost a month. And it's significant because Signature is a major bank within the crypto industry. And the U.S. support for the banking industry is really putting a floor under some of the anxiety that was reverberating across some of these parts of the market. From there, I want to take you to Asia. David Ingles joins us from our Hong Kong studio for the updates from there. David.
Yeah, this floor that you mentioned, Yusuf, we've seen that, we saw it quite literally across the regional benchmark. And really the question is now, to what extent the Fed then endorses this view in the markets and this shifting expectations around how high they can actually go. The reason we bring this up, so on price, we're actually doing quite well. A lot of this, by the way, has to do with what's happening here in Hong Kong and out in China. But when you look underneath the hood, right, so for example, a good indication here would be measures of implied or expected volatility across most of these markets. Price is up, but also this is also up. And as you can see, we're bracing for there's a lot of key event risk this week. And as you can see across Asia, that's really also the move we're seeing here. Now, also consistent with the other move on this sort of repricing on Fed expectations here. So yields are pushing substantially lower in many parts of the region. The dollar, as you can see, is also offered up quite substantially against a lot of the Asian crosses. Dollar China is up down about 1%. Dollar Korea is down about 1.8%. So these are some very, very sharp moves we're seeing this Monday here, Yusuf.
And then even the equity markets in Hong Kong and in mainland China. I just want to unpack that with you in terms of what's outperforming exactly.
Well, on a normal day, we'd be focused here in the Asia Pacific on everything that came out. You know, it's NPC weekend, right? It's the closing session. We're wrapping things up there. And, you know, a lot of the big surprises on the weekend, for example, on, you know, the reappointments of Yi Gang, for example, as PBOC governor, the commerce minister, the finance minister. So that's an additional net plus, if you will, across these markets. So on top of, I guess, the floor that for now that authorities have put underneath risk assets, there's also that factor that's driving this higher, right? Now, I'm going to take you back to the yield story because that's also really what's pronounced right now. I'll end on this. In fact, have a look at some of the big names. You have yields pushing higher. So you are also getting that repricing higher on a lot of these big tech names as yields continue to fall. Just keep in mind, we're coming off 5 days of fairly sharp losses. So it's also about repositioning inflows here, Yusuf.
All right, we will leave it there for the moment. Thanks, David, for the highlights. That's David Ingles there. I want to stick with the SVB story as my next guest believes that the venture capital ecosystem was having a heart attack. And he also sees significant regional ripple effects in the Middle East. Has the U.S. done enough, though, in terms of avoiding the worst? Let's ask Nabil Slimane. He's the CIO at Al Dhabi Capital. Nabil, I mean, yes, a sigh of relief, sure. But when you look under the hood of some of the announcements, does that have the makings of a healthy resolution?
I mean, hi, Yusuf, how are you? It's a pretty dynamic situation right now. There are so many things happening at the same time. But just to put things into perspective, it was a Lehman Brothers moment for the venture